Good evening to the lecturer and my fellow friends. My name is Darshini, daughter of Kanapati, and my metric number is S67716. Today we'll be presenting about the annual report for the company Teck Guan Perdana Berhad for the year ended on 31st January 2023. First of all, the vision of the company is to harness abundant wealth from the non-earth resources, and the vision is to craving to serve humanity, and also the goal of the company is to conduct mutually beneficial and ethical relationship on the principles of honesty, integrity, and sustainability. The key products that the company offers are palm oil and also cocoa sector. And there are five activities that are involved in the company, which is sale of dry cocoa beans, sale of plantation produce, and sale of crude palm kernel oil, sale of palm kernel expeller, sale of palm oil related products, and also the last one is sale of cocoa products. And the customers that purchases the goods that the company produces includes Nestle, Cadbury, M&M, Mars, Gherkins, and EDF and Men. Kuan Perdana Berhad holds a significant market position in Malaysia as it will be contributing to the country's economic landscape through the palm oil cultivation, processing, and also trading. The company's revenue and profit before the tax for the financial year ended on 31st January 2023 were 489.66 million, with a decrease almost 2.56% compared to the previous year. The palm oil product segment reported higher operating profit. In continuation, the group's profit after the tax for the year 2023 was 29.75 million, up from 19.73 million the previous year. The palm oil product segment remained a significant contributor despite low fresh fruit bunch yields. Management is optimistic about the long-term industry prospect, focusing on productivity, engagement, and cost optimization. Operational segments. Kuan Perdana Berhad's operational focus spans several divisions of the palm oil business, which enable it to effectively handle the industry's difficulties. Kuan Perdana Berhad is a key contributor to Malaysia's palm oil industry, operate across multiple divisions, addressing sustainability and environmental issues and adapting to industry changes. As we can see from the pie chart given there, the first one is about the crop mix, where there is we can divide it is divided into cocoa and also oil palm hectares, and the second one is oil palm hectares by age. There are two bar chart for the oil palm plantation, and the first one is yield per mature hectare. As we can see, there is decreased rapidly from 2019 to 2023, and for the FFB production there is a decrease from 2019 to 2022, and from 2022 to 2023 there is a slightly increase. So we can conclude here as the average selling price for the oil palm plantation from 2019 to 2021, there is a slightly increase.
Assalamualaikum. My name is Imam Suraya. Firstly, I want to talk about MFRS 116, which is property, plant and equipment. For initial measurement, PPE is initially measured at its cost. The group used historical cost convention and modified to include other bases of valuation as disclosed in other section under significance accounting policy. Next is subsequent measurement. PPE is measured as per either cost model or revaluation model. Under cost model, the carrying amount of PPE is measured at its cost less any accumulated depreciation and any accumulated impairment losses. The group has a list of PPE, which is a building, tractor and motor vehicle, plant and machinery, and office equipment, furniture and fixtures. Next is depreciation and impairment of PPE. Depreciation is systematic allocation of the depreciable amount of an asset its useful life. The group has decided that in order to write off the depreciable amount of asset over their estimated useful life, depreciation on PPE is charged to profit or loss using a straight line method. Also, the group estimates for the residual value, useful life, and related depreciation charged for the PPE. The group anticipates that the residual value of its PPE and right of use asset will be insignificant. Last but not least, impairment of PPE. The group determines whether an item of its PPE and right of use asset is impaired by evaluating the extent to which the recoverable amount of the asset is less than its carrying amount. Second is MFRS 15, which is a revenue from contracts with customer. There are criteria of transfer control of goods or service that the group has determined. First is the customer simultaneously receive and consume the benefits provided as the group performs. Second is the group's performance create or enhance an asset that the customer control as the asset is create or enhanced. Lastly is the group's performance does not create an asset with an alternative use, and the group has an enforceable right to payment for performance completed to date. There are an item which is sales of goods. The group transfers goods control to client, who is responsible for distributing and charging for the goods, and assume liability for any loss or sustainability. Once goods are delivered, a receivable is recognized, marking the time before payment is due. For the third MFRS is MFRS 138, Intangible Asset. Intangible assets are non-monetary assets valued by their owner's right or benefits. They generate benefits over multiple reporting periods and are not physically present. They are often uncertain about future benefits, making it challenging to determine their value and their useful life. The group has one of intangible assets, which is deferred tax assets. Deferred tax assets are reduced at the end of each reporting period, ensuring they don't realize associated tax benefits. They are recognized in equity, comprehensive income, or profit and loss. Deferred tax are offset when there's a legally enforceable right to set off current tax assets against liability. The group's own defers tax assets and liability based on enacted tax rate at the end of the reporting period. These assets are recognized for the future taxable profits, deductible temporary difference, unused tax loss, and unused tax credit.
FRS 141 Agriculture with emphasis on biological asset recognition. Biological asset produced are recognized when entity control the asset as a result of a past event. Probable that future economic benefit will flow to the entity. Fair value or cost of the asset can be measured reliably. Measurement of biological asset. At fair value, less estimate point of sale cost asset wherever fair value cannot be estimated reliably. If not reliably measurement of fair value, biological assets are stated at cost. Subsequently, at fair value, less estimate point of sale cost except where fair value cannot be estimated reliably. If not reliably measurement of fair value, biological assets are stated at cost less accumulated depreciation or accumulated impairment loss. Fair value gain or loss. The gain or loss on initial recognition is included in the profit or loss in the period in which it arrives. Subsequently, change in fair value is included in profit or loss in the period it arises. Guan Perdana Berhad evaluate biological asset including fresh fruit bunch (FFB) at fair value less cost to sell. Net cash flow for the FFB over 4 weeks before harvest are excluded. Gain or loss are recorded in profit or loss. The pre-harvest fair value of FFB is calculated based on market approach, taking into account the market price of harvest FFB adjusted for the estimate oil content of unharvested FFB and less harvested transportation and other selling costs. MFRS 140 Investment Property Recognition. Investment property should be recognized as an asset only when it is probable that future economic benefit associated with the investment property will flow to the entity. The cost of asset to the investment property can be measured by the fair value model. An entity shall measure its IP at fair value except in the cases described in paragraph 53, inability to measure fair value reliably. Paragraph 35, a gain or loss arising from a change in fair value should be recognized in profit or loss for the period in which it arises. Post model, entity should measure its IP according with MFRS 5 if non-current asset held for sale or MFRS 16 if leased asset or MFRS 116 if other cases than A and B. Transfer. MFRS 140 permit transfer to or from investment property (IP) only when there is change in use such as owner occupied, development, sale, and of owner occupied or starting of operating lease indicating a change in use. Teck Perdana Berhad annual report for the fiscal year ending December 31, 2022 adhere to MFRS 140, a financial reporting standard that guides the classification of investment property. The report provides detail on the asset location, nature, carry amount, fair value, and impairment loss. The company also discloses material assumptions used to determine fair value. This helps to ensure accurate financial statement and enable customers to make informed decisions about the company performance and potential profit. Measurement of provision. The provision amount should be based on the best estimate of expenditure needed to meet the obligation at the end of the reporting period, considering risk, uncertainty, time value of money, and future events. Gain from expected asset disposal should not be considered. Teck Perdana Berhad record provision for present obligation based on past event and rely estimate. These provisions are reviewed and adjusted at the end of each reporting period. The discount rate should reflect the time value of money and market assessment of risk associated with the liability. As of 2023 annual report, no change or contingent and other liability are present on the group and company asset. However, some contingent liability may become impossible with year of the financial year end.
Good day, my name is Kumudini Anna Perempuan Vigneswaran. My matrix number is S67108. Today I will be explaining on disclosure of non-current assets. MFRS 116, which is property, plant and equipment. Assets are recorded at cost less accumulated depreciation. Useful lives of these assets range from 5 to 50 years. Property, plant, and equipment must incur costs that are probable to generate future economic benefits and have measurable costs that are reliably determinable. It uses straight line method of depreciation to calculate depreciation expenses. Useful lives and residual values of the assets are reviewed and adjusted as necessary at the end of each reporting period. MFRS 15 Revenue from contracts with customers. MFRS 15's income is acknowledged when control over a product or service is transferred to the customer. The transaction price is then allocated to each performance obligation based on the relative standalone selling prices of the goods or services involved in the contract. It also considers the consideration received from customers in exchange for transferring promised goods or services. This amount is net of sales and service tax, returns, rebates, and discount and represents the amount the company expects to be entitled to provide details on fair value measurements for financial reporting purposes. Next, MFRS 138 Intangible Assets. It recognizes and measures deferred tax assets and liabilities. Temporary differences are recognized as deferred tax assets and liabilities for all transactions except those related to goodwill. It measured using the tax rate that will apply when the asset is realized or the liability is settled. Carrying amounts of deferred tax assets are reviewed regularly to determine if they are still probable to be realized and any necessary adjustments are made. Offset when there is a legally enforceable right to set them off on a net basis for intangible assets. MFRS 141 Agriculture with an emphasis on biological assets. It refers to the growing on plants, which are considered current assets since they are expected to be harvested and sold or used for production within a period of 4 weeks following the reporting date. It is measured at their fair value less the cost to sell and any resulting gains or losses. It is determined using the market approach. Any changes in the fair value of these biological assets are recorded in the financial statements in the period they occur and affect the income statement. Now, MFRS 140 Investment Property. It can be categorized into two main categories, which is capital appreciation and rental income. Capital appreciation refers to the increase in the value of investment property over time, which can be caused by various factors such as market condition, improvements made to the property, or change in the surrounding area. Rental income is the income generated from leasing out the investment property to tenants, and it is received in the form of regular rental payments from the tenants. MFRS 140 recognizes rental income on a straight line basis over the lease term.
Good day, everyone. My name is Keshika Salvaraja. My metric number is S67668. And today I'll be presenting the fourth element of this assignment, which is economic environment and asset valuation. First, let's discuss about economic environment. Changes in economic conditions such as interest rates and inflation can actually impact the fair value and the amount of non-current assets. So in this company, Teck, Guan, Berhad, we actually have a few non-current assets. For instance, we have PPE, which is also known as property, plant, and equipment, which goes under MFRS 116. And also we have deferred tax, which actually goes under MFRS 138 intangible asset. Okay, now let's see the annual report. So according to the annual report, the PPE, which is subjected to MFRS 116, there is actually increased amount of RM 4,623,443 from the year 22 to the year 2023. So these changes in economic conditions such as interest rate and inflation can actually impact the fair value and the amount of PPE. Moreover, a downturn in the market can actually result in declining in PPE's fair value, and this also could be a potential impairment. Next, let's see the deferred tax. So in the deferred tax, there's actually no changes in year 2023, but there is amount of 1,306 and 835,000 ringgit in year 2022. We actually refer this 1,306 and 835 ringgit as a negative or also as a deferred negative because the tax is either overpaid or due tax. Now let's move on to market volatility. So this is also one of the factor under economic environment. So this market volatility actually refers to the amount and frequency of price swings in the market. It either goes up or down. So here we are taking an example from manufacturing and trading of cocoa products of this Teck Guan Berhad company. So as you guys can see, in the year 2023 and year 2022, the average selling price of cocoa products was 12,638,000 per ton and 13,491 ringgit per ton respectively. So this increase in price could actually attributed to various factors such as changes in global supply and demand, fluctuations in currency exchange rates, and more. So now let's move on to asset valuation. So asset valuation is important for a fair representation of a company's financial position. Asset valuation is actually a process of determining the fair market value of an asset. So in Teck, Guan, Perdana, Berhad, we have PPE, which goes under MFRS 116, and deferred tax, which goes under MFRS 138, intangible asset, are the clues of estimating the values of non-current asset. So we can actually see the valuation of PPE in MFRS 116 in this company based on cost of model, where the PPE is actually stated at cost less accumulated depreciation and any impairment losses. Whereas the deferred tax assets, which goes under MFRS 138 intangible asset, are actually recognized in the financial statement based on the probability of future taxable profits that can be utilized.